Hey everyone, welcome back to the channel. Before we dive in, hit that subscribe button. We break down powerful mortgage strategies to help you keep more of your money. Today's video is a deep dive into the latest VA loan updates, co-borrower rules, streamlined refinancing, and example scenarios you can use in real life. Let's jump in. We need to start with what's new in 2025. The VA home loan program isn't static. Lawmakers have introduced reforms that change how veterans and their families access benefits, passed in mid-2025. Among its major changes, veterans can now pay buyer's agent commissions directly, a flexibility that levels the playing field in hot markets. It also creates a partial claim program to help veterans avoid foreclosure by allowing the VA to purchase part of a delinquent loan, up to 25% principal or 30% for COVID-era affected loans, and place it at the end of the loan term, interest-free. The Act makes permanent certain flexibilities that were temporary before. The older program, VASP, VA Servicing Purchase Program, which allowed the VA to buy delinquent loans outright, is being replaced by the partial claim model. Because of that, there is more urgency for borrowers to work with servicers early if facing hardship. In many counties, VA loan limits are no longer binding as long as you qualify and the property appraises. The VA doesn't require a down payment if you have full entitlement and the value supports it. That said, new standard loan limits were increased in 2025, $806,500 in many U.S. counties, 5.2% bump over 2024. The minimum active duty service requirement remains, typically 90 continuous days in wartime or certain other durations depending on era. The VA itself does not set a minimum credit score, though lenders often do. Many use 620 credit score as a baseline. New loss mitigation. BOF foreclosure protections are spelled out under the Reform Act, so veterans in default have more structured pathways to avoid losing their homes. So those are your new rules to layer into the classic VA benefits. Let's refresh on VA basics, but with more depth so you can speak confidently about every element. Veterans, active duty service members, reservists, and certain National Guard members, depending on length and conditions of service. If you were discharged due to a service-connected disability, you may qualify even with shorter service. Eligible surviving spouses of veterans who died in service or from service-connected causes can also qualify. This is your foundational proof to a lender that you have entitlement under the VA system. You can request it via e-benefits, via your lender, many VA-approved lenders pull it for you, or via VA Form 26-1880. New VA Lenders Handbook Updates, 2024-2025, refine processing rules and internal electronic verification methods. Basic entitlement is $36,000, used as a standard guarantee measure. But your actual available entitlement could be much larger depending on prior usage and whether you've restored entitlement. If you have full entitlement, you generally don't need a down payment, even on high-priced homes, if you qualify financially. If you've used part of your entitlement already, maybe from a prior VA loan, the amount you can use is reduced, and in high-cost areas, you may need a down payment to cover the gap. To use a VA loan, you must intend to occupy the property as your primary residence. VA generally allows 60 days from closing to physically occupy. In special cases, lenders or VA may allow exceptions or extensions, e.g. active duty deployments. Note: co-borrowers also often must show intent or actual occupancy, depending on lender rules. Now we get into a complex but super useful area: co-borrowers and non-veterans. Let's use our example of JJ and Rue and then introduce a third party, Sam, who is not VA eligible. Rue, the spouse, can be added as a co-borrower or co-signer. This is common to combine incomes, improve credit profile, or qualify for higher limits. However, Rue alone, as a civilian, not veteran, cannot apply for a VA loan on her own unless she is an eligible surviving spouse or has her own VA eligibility. If Rue's credit or income is strong, including her can strengthen underwriting. But if her credit is weak, her inclusion might hurt more than help, so evaluate carefully. This is called a joint VA loan situation. A joint VA loan allows a VA-eligible borrower to team with a non-VA co-borrower under certain conditions. Legally, the VA only guarantees the veteran's portion of the loan. The non-veteran co-borrower's portion is not insured by VA. Because that non-guaranteed portion is riskier, many lenders will require a down payment to cover that share. For example, if Sam is responsible for 25% of the loan's amount that is not covered by JJ's entitlement, Sam might have to bring down payment funds for that portion. All borrowers' credit, debt-to-income (DTI), and income are underwritten. The combined income helps determine qualification. The co-borrower is typically required to occupy the property as their primary residence, depending on lender rules, though VA itself doesn't always mandate co-borrower occupancy. Some lenders are stricter. Because the non-veteran's portion is not insured, funding fees may only apply to the veteran's part, or that portion which uses entitlement. There are rules in VA's M26-7 about how the funding fee is assessed on joint loans. VA's Lender's Handbook, Chapter 7, provides special underwriting guidelines for joint loans involving one or more non-veterans. To apply, you will need a Certificate of Eligibility, 2 years of income documents, recent pay stubs, bank statements, and a photo ID. The COE proves that you qualify for a VA benefits. You can get it online through VA. Government or your lender can pull it for you in minutes. Every VA loan requires an appraisal to confirm the home's value and safety. Most VA loan includes a one-time funding fee, but if you have a service-connected disability, that is waived unlike FHA and conventional. VA loans never charge monthly mortgage insurance, a huge lifetime savings. You cannot have a pure co-signer who doesn't live there. The VA does not allow non-occupant co-signers, i.e., someone who signs but never lives in the home. The VA treats some spouse co-borrowers as non-joint under certain conditions, if spouse is not veteran. Be cautious. Fewer lenders are willing to do joint VA loans with non-veterans, risky for them, so business terms may be less favorable or the down payment requirement higher. Next up, how JJ and Rue can refinance once they own the home. The VA gives special flexible refinance options. IRRRL, Interest Rate Reduction Refinance Loan, aka VA Streamline. This is a refinance only for existing VA loans. You cannot use IRRRL for a non-VA mortgage. It typically requires no income re-verification, no appraisal, and minimal underwriting, making it fast and low friction. A new COE is not required for IRRRLs. Lenders or VA use existing records or e-verification. The goal is to reduce interest rate and monthly payment. Sometimes you can convert from adjustable to fixed. Closing costs can be rolled into the loan. You don't have to bring cash to closing, depending on mortgage structure. You can refinance a non-VA loan or a VA loan for cash out, but this is more conventional in structure, subject to full underwriting, appraisal, income checks, etc. The funding fee and entitlement usage apply for cash-out refinances too, unless waived. Suppose JJ and Rue initially got a VA loan at 6.5%. A few years later, rates drop. They can apply for IRRRL, skip heavy doc burden, and cash in on savings fast. Alternatively, they might choose a cash-out refinance if they want to tap equity for repairs, investment, etc. But that's a heavier process. Alright, let's walk through every step of how JJ, Rue, and possibly Sam go from planning to closing. Now let's narrate a full case to make it real. Let's list every benefit again, plus potential risks and best practices. Advantages include zero or low down payment, no mortgage insurance, competitive rates, assumability, flexible underwriting, new foreclosure protections, commission flexibility, easy IRRRL refinancing, capped closing costs, and funding fee waivers in some cases. Now, risks, pitfalls, and tips to watch out for. Watch out for weak co-borrower credit dragging the file. down payment needs for joint non-veteran loans, limited lender support for joint VA loans, VA minimum property requirements on older homes, occupancy obligations, and the need to be proactive with servicers. Always negotiate commission and closing credits. JJ Rue and Sam's scenario shows how the 2025 updates strengthen the VA system and open more doors for families. If you're even remotely eligible, don't sleep on this. VA loans may offer you one of the strongest paths to homeownership in America. If you liked this deep dive, hit subscribe, smash that like button, and share it with any veteran family exploring home loans. This is for educational purposes only and not a financial advice. NMLS 10-210597. Real Estate Reflection. Quote by Laura Ingalls. Wilder. Home is the nicest word there is.